want to bring in Jim Rogers. Everybody knows Jim Rogers. He's the chairman of Rogers Holdings. Jim, welcome to the program. Good to see you again, sir.
I'm here to say hello, Stuart. How are you?
No, I want more than that. I want more than just a hello, Jim.
I won't say goodbye yet.
You're right. Here's what I want. Number one, you say that a huge sell-off is coming, the biggest in my lifetime. So when is it coming? First of all, that's the first question. When?
Well, Stuart, you watch Barney and Co., and you'll know I'm not smart enough. I'm terrible at market timing. Watch Fox News. Don't ask me.
That's not an answer, Jim.
I know, but it is an answer, but it's probably coming beginning later. Crashes don't happen in one day. The market is going to go up for a while. I'm still optimistic about the U.S. stock market for a while, and Asian stock markets. It'll go up, and sometimes later this year or next, the decline will start in. But it doesn't happen in a day. And Stuart, when I said it's going to be the biggest market downturn in my lifetime, I mean, that's not so strange to me. 2008, we had a problem because of too much debt. Stuart, as you well know, the debt has skyrocketed since 2008. Yep. So when I say it's going to be worse than my lifetime, how could it not be?
So you're a debt bomb guy. You're saying, look, the crash is coming, the huge sell-off is coming, and it's because of debt. So you say, I asked you when, and you kind of hedged a little, maybe late this year, early next year. And then I asked why, and you said it's the debt bomb. So that's your scenario here.
Yes. I mean, Stuart, do you remember 2008 and 2009? That was because of gigantic debt. It's getting worse. It's much worse now. The Federal Reserve alone's balance sheet is up 500% since then. By the way, Janet Yellen says we're never going to have another bear market in our lifetime. So maybe you shouldn't listen to me.
Okay. All right. I'm listening, and I understand that you're in Miami for a blockchain and a cybersecurity conference. Okay, just strip out all of that lot for a second. What do you think of cryptocurrencies? Are you investing?
Well, I have never bought a cryptocurrency. This blockchain conference, it's a blockchain conference, but of course that includes cryptocurrency. Their theory is that if they educate people, and they got some amazing speakers, that everything will be understandable at least. I have never bought a cyber currency. Blockchain is certainly going to be a great change for all of us. It's going to change the world as we know it. I'm not so sure about cryptocurrencies.
Okay, blockchain, though, in what way does it change the world as we know it? What's the great opportunity here in blockchain?
I wish I could figure that out. I hope I will learn at this conference, because I haven't found a blockchain investment yet. But Stuart, it's all in China, for instance, they don't have money. I tried to buy an ice cream cone the other day. Poor woman couldn't sell it to me because I had money. I didn't have on my phone how to pay for it, so she gave me the ice cream. I wish I'd been buying a Mercedes.
So you think blockchain solves this problem, or blockchain blockchain does what? Tell me what it does for me.
Well, for one thing, it instantly pays everything. Instead of right now, if you and we get a bill, we send a check in, it's processed, has to go through the various departments to the bank's got to pay. It's all done automatically. It's a miracle for somebody like me who barely understands computers, but it's all done instantly with a lot less paperwork and a lot less processing.
And Jim Rogers has not yet decided how to get into the blockchain technology.
Stuart, if I find out at the conference today and tomorrow, I'll let you know.
What is your major investment right now? What is it? Is it in a stock, or is it in a bond, or what is it?
Well, I own a lot of U.S. dollars because the U.S. dollar is down. It's going to go higher. I guess I own a lot of Chinese shares, Russian shares, Japanese shares. Asia, I'm more interested in Asia right now. You know, the Japanese stock market's down 50%. The U.S. stock market's near all-time highs. I know you buy low and sell high, Stuart. I've known you a long time.
Okay. You're dishing out the compliments this morning, and that's real good, James.
All I said was I've known you a long time. I don't know if that's a compliment or an insult.
Do you live in Singapore nowadays?
I do live in Singapore, but I'm in Miami today for this blockchain conference.
Okay. Jim Rogers, thanks very much for joining us. Anytime you want to come on the show, you come on. We'd love to see you again. Thank you, Jim.
Yes, and now I'll say goodbye.
Yes, now you say goodbye. Hello and goodbye. Got it, Jim. See you later.
Good.
The Daily Devil's Dictionary, economy will crash. Famous investor Jim Rogers describes the impending doom of the Western economy. The Fed will try, but it won't work. Interviewed by Business Insider's Henry Blodgett, American investor Jim Rogers offers us a dire vision of the future, forecasting a crash worse than that of 2007-08 and, more worryingly, the failure of governments to bail out the faltering parties. Many analysts have been pointing to the likelihood of a new crash, but Rogers seems convinced it's going to happen by 2019 at the latest. And he sees it as dwarfing the Great Recession of 2008. As per the interview, Blodgett, and how big a crash could we be looking at? Rogers, it's going to be the worst in your lifetime. Here is today's 3D definition. Crash. A recurring event in modern economic history, producing the moment when the world realizes that the current system of financial capitalism is built on sand and its supporting structures governed by wind and waves of variable force and height, before implementing superficial remedial solutions making it possible to drift off into a haze of forgetfulness while waiting for the subsequent crash. Contextual note. Rogers bases his analysis on the amplitude of debt across the globe. He pulls no punches and even dismisses the usual reassuring wisdom about the resilience of our institutions. People are going to say it's Western civilization. It's going to collapse. And the Fed, who is made up of bureaucrats and politicians, will say, well, we better do something. And they'll try, but it won't work. It'll cause some rallies, but it won't work this time. Rogers made his reputation as an investor in the 1960s and 70s, at one point alongside George Soros. He is a trend follower rather than a trendsetter, but with a wide view of the world, which makes his testimony particularly interesting. He is quoted as saying, "If you were smart in 1807 you moved to London, if you were smart in 1907 you moved to New York City, and if you are smart in 2007 you moved to Asia." Which is what he did at that time, moving from New York to Singapore. His children speak Mandarin. Historical note. Although his perspective is purely financial, Rogers seems to have reached similar conclusions about the drift of history as historian Alfred McCoy, who predicted, "My money is on China with its trillion-dollar infrastructure program to integrate Eurasia into an economic powerhouse, another trillion to develop and dominate Africa, and a resurgent, tech-savvy military to slice through Washington's encirclement of their continent." In examining the 2008 crash, Rogers adds an insight about China, whose accumulated wealth actually served to counter the threat to the global economy and stabilize the Western economy. Now even the Chinese have debt, and the debt is much higher. The unnoticed safety valve that rescued the economy in 2008 has disappeared. Rogers tells us something else that's extremely revealing about the vulnerability of today's financialized and militarized economy. "I learned very early in my investing careers, I better not invest in what I want. I better invest in what's happening in the world. Otherwise I'll be broke, dead broke." The fathers of capitalist economics, Adam Smith and David Ricardo, writing 2 centuries ago, described the growth of the economy, the wealth of nations, as the collective result of people investing effort and resources in doing what they want. Everyone could, at least theoretically, benefit from the varied initiatives of the multiple actors in the economy, producing goods and services. The new role of money in such a system had a purpose: to enable those who had projects to bring them to fulfillment. It wasn't about accumulating profit, except in the sense that profit was the key to sustainability and incremental growth. For the early capitalists, investors were motivated by the idea of doing something they wanted to do and which they believed people wanted to buy. As a smart investor, Rogers sets the record straight on today's markets. First, it's all about leveraging through debt. Second, it's about what's happening in the world. And what has happened in the world, especially in the last half-century, is a focus on money alone, producing a culture of greed. It's easier and requires less effort to make money from money, which always means not only ballooning debt but also constantly expanding inequality. So, on the one hand, we have a visibly unstable political landscape and a financial bubble. The last remaining question is this: will speaking Mandarin actually guarantee survival? In the age of Oscar Wilde and Mark Twain, another American wit, the journalist Ambrose Bierce, produced a series of satirical definitions of commonly used terms, throwing light on their hidden meanings in real discourse. Bierce eventually collected and published them as a book, The Devil's Dictionary, in 1911. We have shamelessly appropriated his title in the interest of continuing his wholesome pedagogical effort to enlighten generations of readers of the news.